I've been doing this for 20 years now, since 2006. And so, you know, having them around this long really is huge because they give me tons of referrals all the time and things like that. And I was able to build that through short-term flips and short-term lending where they got their money back right away, right? Where, in a 12-month cycle, if tons of investors are consistently getting their money back and being able to redeploy into new capital or into new deals over and over again, the trust gets built when they get their funds back.
Welcome to the Real Freedom Show, where we inspire you to pursue your passion to gain time and financial freedom through opportunities in real estate. I'm your host, Mike Swenson. Let's get some real freedom together. Hello, everybody. Welcome to another episode of Real Freedom, Real Estate Leverage Freedom, where we talk about different ways you can build time and financial freedom in real estate. I'm your host, Mike Swenson. If you want to get started on your real estate journey, check out our website, freedomthroughrealestate.com. It's where we put all of our content, all of our amazing interviews, really with the goal just to inspire you to take some action, move the ball forward, and do something to get closer to your goals in real estate. We don't want to have a lot of people that just sit and listen to podcasts and not do anything. So take some action. Super excited to talk today with Mathew Owens. So Mathew is a CPA real estate investor. You've done a ton, flipped 1,000 homes, lent out on more than $500 million, raised $200 million in capital, own over 1,000 units, close to 1,500 units. You have your company, OCG Capital, and super excited for you to be able to share your wealth of wisdom with us and your journey that you've been on. So welcome to the show, Mathew. Excited to have you.
Thanks, man. I really appreciate it. All that stuff that I look back at that and I just remember the pain that I had to go through on each one of those different strategies to get through the hump and learn my lessons the hard way, in each one of those. So, while
Mm-hmm.
we did a lot, I've also taken a lot of punches in the face and stood back up. And that is what I think makes, someone successful long term is the perseverance through trials and tribulations we all go through, especially in real estate and nowadays in real estate where interest rates are, higher and it makes it a little bit more difficult to cash flow and needing to buy a little bit better of a discount and things like that in order to make things cash flow well.
Absolutely. And you've been in it for a long time. So take us back kind of at the beginning here. CPA, how did that get started? And then tell us about your journey into real estate.
Yeah, man, no problem. So I actually became a CPA because I was going to UC Santa Barbara and I actually wanted to be an architect, but didn't have architecture school there. And so my dad was a CPA and my dad was kind of like my hero. He was a ranger and a sniper in Vietnam and black belt in Aikido and, that kind of, and I could always rely on him to talk with him. And he was talking to me about it. And, he's like, why do you want to become a CPA? I was like, Dad, there's girls with squirt gun fights here everywhere in Santa Barbara. I'm not leaving, Dad. And he's like, you're going to become a CPA because of girls. I'm like, yep, that's what I'm doing right there. At 18 years old, you idiot, right? And so I ended up getting my degree in economics with an emphasis in accounting and got a job at a CPA firm, doing audit and tax and learning the inner workings of internal controls and things like that, which was pretty interesting. But after a while, it just got monotonous. And like a lot of people that have W-2s and got a career they got going, it becomes painful and just like you don't want to do it anymore. And I remember wanting to cry going to work, going, I can't do this. I can't do audit and tax I hate the IRS. So I'm like, I can't talk to these people, right? So I ended up going to getting some real estate courses, and I think it probably gave me a little bit false sense of security to jump into real estate in 2006 when I got my first flip under contract. And
Mm-hmm.
we started flipping houses right away. And I got an office at the World Trade Center in Long Beach on like the 23rd floor that was like overlooking all of Long Beach, sold a ton of houses. We're killing it all of a sudden and thought I was dope and realized, nope, you're not dope. Here's the market crash coming to just wipe you out and take away everything. And I ended up taking out 290 grand on my credit cards to, try to float and pay my investors back and get them paid off because we had to sell a bunch of properties at discounts and things like that. And was able to save my investors' capital, but I ended up taking the hit personally. But that's how they all started reinvesting with me. I just hunkered down, kept pushing forward, and kept moving that needle, and they kept starting reinvesting with me and getting more referrals. I started going to 4 to 5 networking events every single week for like 2 to 3 years to develop capital relationships and partnerships, chamber of commerce events, real estate events, other monthly events that are piqued my interest, right? And that kind of thing, just to develop these relationships. And they all started reinvesting. We started flipping and flipping and flipping to do where we were doing about 10 a month at that time and using all cash. We weren't using bank money at all, which that's what hurt us is we had a strategy where we were buying and renovating and selling with seller financing, and then um, they would go refinance right away afterwards and then pay us off. And the appraisals just magically were higher in 2006 and 7, of course. And I thought we were dope from doing that, right? Of course. And
Hmm.
realized, no, you don't know what you're doing yet. Here, just take a seat, son, right? And since then we just kept pushing forward and grinding. And we've had multiple people steal from us in the past and multiple trials and tribulations and foreclosures we had to deal with. But we now flipped over 1,000 houses and lent out over 500 million and raised over 200 million for multiple deal types. And we invest in all different types of asset strategies. I really personally believe, hey, own your own personal portfolio, do your own active business, invest passively also so that you can maybe invest in large multifamilies or self-storage or other assets that you can participate in without having to be the subject matter and operations expert in. And then on the other side, we also invest in alternatives where own gold and silver as an insurance policy. We invest in litigation or accounts receivable financing, or I also own a cannabis farm in Maine. So there's all different types of strategies to try to mitigate the risk of the market. And some of the things I learned after just being in one strategy, thinking I was, really solid, and realizing, no, you're not. You need a diversified pool of cash flow coming in to really solidify that base, to give you not just the financial freedom, but the time freedom and the location freedom to be able to move. Like I just got to go to Vietnam for 3 weeks with my son this last year, my 10-year-old, and we're going to be going like pretty much every year. And we travel all the time to different spots and can work from anywhere. So, at the end of the day, it's how do you build this business to build the life you want with that time freedom and not being the sole business owner, which I made the mistake of, and a lot of people do, the same thing with through their career, right? So,
And obviously, you didn't get there by yourself. You've got relationships. I'm just thinking you mentioned about your cannabis farm in Maine, right? It's like the exact opposite of California. And so you've
yeah,
got to find great people and great relationships. So before we
right.
dig into that, let's quick touch on kind of the CPA stuff. So, in terms of wearing your CPA hat, investing in real estate, just touch on like some of the benefits for people that maybe they don't think of, or they just don't, they might hear it, but they don't realize the power and the impact of those great benefits investing in real estate, whether you've got a W-2 or not.
So I'll just tell you through the first a story of one of my clients, for example. We purchased a large short-term rental and we bought it, we renovated it, we tenanted it, and then we got the long-term financing on it and got it all up and running on a short-term rental, super high-end, like shipping container pools, golf simulators in the basements, like the things that pop from a marketing perspective with movie rooms and all that stuff, right? And it sleeps like 15 people. And one of our clients came in and he put the down payment down, which was $300,000 on this project. It was a super high-end property in Missouri, and then we were able to front load tax benefits to where he's getting a $276,000 tax deduction. And then in short-term rentals, there's a loophole where you don't have to be a full-time real estate professional that's working, 70 hours or, 750 hours in real estate to get the front-loaded tax deduction for short-term rentals. If you spend 100 hours over the last year, then you can go through and claim large losses against not just passive income, but ordinary income and W-2 income. So our client was able to wipe out $276,000 worth of his W-2 income via this strategy by tracking and putting in the work to actually for that first 100 hours. Now, after that, we do everything. Year two, it's all taken care of. He doesn't have to do anything anymore. The only reason he was doing the 100 hours is to be able to take the tax deduction against his W-2. If he didn't want to do that, you still get the tax deduction. You just can only take it against rental income and other passive income versus the
Hmm.
active income side. You might get maybe up to 25 grand, but sometimes that gets phased out against active income. So it depends on how much money you make if that gets phased out or not. But there's also strategies that we utilize to create more passive income. So we by doing using our diversification strategy. So for example, I invest in lending companies, and when we're doing lending, we are in the business of lending. Interest income isn't necessarily considered passive income. It's considered portfolio income. So it doesn't count. You can't take the big cost segregation studies on real estate against interest income. But if you invest in a company that is in the business of lending and you're a passive limited partner on that, you have passive ordinary income, which then that cost seg can wipe out. So by using investment strategies that can be beneficial to each other, by investing in some debt that is flat monthly payments that are consistent every month versus real estate that you do get cash flow, might be a little bit volatile because of repairs or a tenant turnover or something, but it can go up over time with inflation. You have it decimates the debt with inflation, all these major positives. Then you also get the tax benefits on top of that. Yes, the real estate should always work right, whether you are considering the tax benefits or not. Like the short-term rental we did was a 12% cap rate. He's making 12% on his funds, just for putting the down payment on top of the tax benefits. And so you look at some of these benefits and they really add up from a tax perspective. And there's so many strategies out there to mitigate literally your biggest expense, which is taxes.
Absolutely. I remember we were just in a meeting the other day and had a person talking about, your largest expense in your life is your taxes, right? And so a lot of people might think it's kids or different things like that. And so it's taxes. So it's finding ways to limit your tax burdens. And there's a lot of value in that. For somebody that's maybe looking who to talk to, who might be a good resource to help with taxes, what advice do you have for somebody on finding a good real estate related tax person?
So when you're looking for tax help, when you're looking for a CPA or a tax attorney to come in and help you with your taxes, it really fully depends on your personal situation. If you have a W-2 type, situation and no other outside investments and things like that, you can easily go to like, an HR block or something along those lines and pay a cheap price or do the taxes yourself on TurboTax, or, you may still want to go and get some tax advice and pay for tax planning because it could save you a lot of money, and it could give you the trajectory of how to build so you pay less tax on your W-2s and on your income. But if you're going out and if you have even a business or you have any real estate that you're holding, it's highly important in my eyes to go get that tax advice. Like I don't go and do tax planning for clients. I actually go get tax planning for other CPAs, and I'm a CPA because I focus in real estate and investments a lot more now. But trust me, I know I understand the law a lot more now of being a business owner than even I did doing taxes as a CPA, because I don't want to pay the tax. So I find every way possible to not pay taxes, right? So when you're looking for a CPA, then I highly recommend doing an interview. Go and use ChatGPT or, Claude or something. Come up with a list of questions that you should be asking your CPA. They should be teaching you all the ways that you could be potentially saving on taxes. And some of those may be too complex for you. Some of those you may want to take a stab at and put them in place. For example, I have a self-directed 401k that I can contribute 25% of my salary as a matching contribution from my own S corporation. Plus, I can contribute my own personal savings to that. And now I can also control it and put that money into deals and real estate and other assets that I can actually, utilize, right? And build my own portfolio for myself that creates a cash flow stream to where I don't have to deplete the principal. It literally is just producing enough cash flow to live off of. That's the idea. Or a health savings account that I can do self-direct as well into real estate and other things, where you can put like $7,000, $8,000 a year into a health savings account on a family plan and start building that to where all your medical expenses can be paid for, tax deferred that way. And it's just little chunks like this let alone there's trust structures, there's life insurance structures. If you don't want to pay taxes anymore, there are ways to never pay taxes again with the right structures. It's insane to say, but there are absolute structures. Now, you might pay something minimal or something, but in comparison, like you're getting rid of like 99% of your taxes with different strategies if you take the time to deep dive. And so that's why I pay outside people to do tax planning work for me every single quarter, looking at my tax projections. What am I going to make for the next year? What things can I shift into next year or shift into this year from an expense perspective to mitigate my burden? Can I pay my kids for marketing work or other strategies that I want to pay them for to push income there, right? There's so many things. There's a thing called the Augusta rule where you could rent out your primary residence to your business for 14 days at market rates for a business purpose and document that, and you don't have to pay income on it in your personal name, but your business gets a deduction for it. So that could be 14 grand of a deduction just right there with just this one Augusta rule, for example. A lot of people keep their money in their own name and their business in their own name instead of putting it into an S corporation. A lot of realtors and do this a lot, where you see them making tons of commission income and they're paying 15%, on 300, $400,000 sometimes of income, instead of just putting that into an S corp and now taking off 15% on 66% of that income just by shifting it into an S corp and doing a salary dividend split in the S corp. So these things are all things that once you learn them, then there's ways to mitigate taxes in a massive scale.
Awesome. And thank you so much for sharing some of those best practices and top tips. I know obviously for anybody listening, like what you just rattled off is a lot of stuff and it's deeper stuff, but at least you shared kind of the tip of the iceberg of there's so many great opportunities for people and you've got to take the time. It's worth the time and the hassle. And for a lot of people, it's not the most exciting stuff. However, once you start to understand some of these things, yeah, there's a ton of opportunity to save money, bring in more income, keep more income when you use these strategies. So I appreciate you just kind of sharing some of the top tips there.
Yeah, absolutely, man.
So talking about kind of what you do today, so you've got a lot of capital that you raise, debt funds, what opportunities you search for and how they come together, and then how you can obviously you work with a lot of investors, you're raising a lot of capital, so help them find opportunities that they're excited to put their money into.
Really, a lot of the opportunities get sent to me now where I don't have to look for them anymore. We used to do a ton of pay-by-click marketing, direct mail marketing, and other marketing strategies to find properties every single month to flip. I slowed down a lot on the single family home flipping. I do still hold and do projects and have renovation projects, and I do different tax credit strategies, but I don't really have to market for them because the deals come to us now. When you have the capital to deploy, then the deals will come to you and you can structure those deals because you have the capital, right? So and whether that's on the lending side or the joint venture side or other means of creating income through some of these things, right?
Mhm.
And you know and we also used to do direct lending, and we do a lot less of that now. We still do some, but we buy the debt now instead from lots of brokers that we work with that have good systems, because it's a ton of work doing all that talking with tons of borrowers and stuff like that all the time. I have 11-year-old and an 8-year-old, and I don't want to be talking to people all day long on the phone, which this usually with the game plan for a real estate investor is to be on the phone negotiating, talking to people, handling contractors, dealing with all that, right? And so being able to cut down some of the more active strategies and focus a lot more on larger strategies, like we just finished an accounts receivable fund where we raised over 38 million for that. And the way we did that is very unique, and it creates an income strategy for people with large databases, where we went out and lent money at a 30% interest rate against accounts receivable financing at 25% of what that project was, the actual collateral was worth. And then we went and gave our investors 20% and then gave our capital partners 25% if they put in over $1 million or more. So if they raise 1 million from their database in their own fund structure, so it's all compliant with SEC purposes, then they are then investing those funds, be getting better metrics and by getting a better share class into our fund. And so we're able to do that we raised a lot of capital from our own database and our own investors that wanted to invest and get an interest only 20% return, which is insane, type of return, of course. But then our capital partners were able to raise millions of dollars for us also via that and make a spread on that capital as well, which makes them, a great return on their time for doing that. And
Hmm.
so we teach other people how to raise capital like this because it benefits us as well, and have that strategy out there where we do trainings on how to raise money in our marketing strategies. But then we also go out and we do different direct projects where we manage a portfolio of over 800 mobile home parks that we're involved with, or mobile home park units, sorry, not parks in total, but
Hmm.
that we are part of. And then we also own a cannabis farm where we are direct operators. I have a CFO and a COO, and they report to me, and I manage that aspect of things and the capital side of things, and be able to help with the whole project. And now we're actually doing an expansion where we should end up at about a $4.5 million net income on a $10.5 million capital stack with no debt on that type of asset, which is really an interesting structure where investors get all their money back first before there's a split with the GP on that deal. So really cool. And there's all these deals that I'm working on. Investors are projected to make like 19% cash flow and 28% IRR on the cannabis deal. On our litigation financing deal, investors can make 20 to 30% on their funds. So I focus on these alternatives that are higher interest, but then I also focus on the real estate stuff and short-term rentals and long-term rentals, so that way we have a good base of cash flow coming in and inflation hedges that I think is super necessary, because I think the government's just going to keep printing money like crazy, forever. And so
Hmm.
owning that, decimating the debt that's fixed rate debt on there, I think is super important, while also investing in these other alternatives that can give you a higher rate of return, a really good cash flow, and diversifying into multiple operators, multiple asset classes, and multiple markets is really the
Hmm.
key to that like base foundation there.
And obviously a big part of that is, building good relationships and trust with your people, because they want to know that their money's being taken care of. Obviously, some
Right.
people have different risk tolerances in terms of what they want to do. Just out of curiosity, how many of these folks have been with you for the longer haul, from the flipping days, or have kind of stuck with you through it? Because I know you talked about, having to take on debt yourself to keep your investors whole.
Yeah.
That's everything that I know about capital raising, right? Is to make sure that you kind of eat last. Your investors, you're trying to keep those great relationships and
Right.
help them. So, curious to hear the journey of some of these investors that you've had for a while. Are you looking to get started or scale in real estate investing but don't know your next step? Are you overwhelmed thinking about finding deals, analyzing deals, doing due diligence, and managing properties on top of it? Go ahead and push the easy button and invest with us. Real estate investing is what we do full time. We've done dozens of deals with hundreds of doors. We have the knowledge and experience to handpick the best deals that most investors can't find. We've got large off-market deals all the time where you can hopefully find returns and economies of scale that you just can't find on your own. The best thing is it's 100% passive to you for less capital than you put down trying to acquire a property on your own. Don't let this year go by where you don't make the leap, add to your portfolio, or you just sit in analysis by paralysis. To find out more, visit freedomthroughrealestate.com and click on invest. You can book a call and learn more there. So get to scaling your portfolio now with us by your side. That's freedomthroughrealestate.com and click on invest.
Yeah, for sure. And a lot of those investors have been with me for years. I mean, I'm talking I've been doing this for 20 years now, since 2006. And so, having them around this long really is huge, because they give me tons of referrals all the time and things like that. And I was able to build that through short-term flips and short-term lending, where they got their money back right away, right? Where, in a 12-month cycle, if tons of investors are consistently getting their money back and being able to redeploy into new capital or into new deals over and over again, the trust gets built when they get their funds back, right? And so I was able to build a big base of people that had built the trust for me early through my flipping and through my lending business and doing that over and over again. We also have our debt fund that we have in place that, has been running since 2018, have never missed a single preferred return. So all those investors that are in our debt fund, are consistently there, right? And it takes a long time. And don't get me wrong, I've taken major hits. When the interest rate environment, took everything kind of real estate in a different direction, I'll say, we had multiple foreclosures that we just had to deal with, and we paid our investors anyways. And we took the hits and took them over and handled the projects and renovated them and tenanted them and refinanced them and did all the work so that our investors didn't miss a beat. That's how you retain those long-term relationships. Most of these investors can't handle the ups and downs that we deal with in real estate all the time, right? I
Hmm.
swear sometimes before noon on a Monday, you're like, did I just deal with 20 problems right now? Like it's insane. You're just like, did this really just, how many problems can I really just have to laugh it off, right? So,
Hmm.
and or go meditate and breathe, sometimes. But at the end of the day, keep them consistent. Take care of them. If you can take the hit for your investors, and they will always reinvest with you. I hope an instance comes up where that never happens, where I can't take the hit or something like that for my investors. But at the end of the day, my investors have never lost money with me on any deal that I've worked on, as far as like that I've taken, capital on. I think we
Hmm.
we had a few the single family home people that maybe had a bad tenant here or there or something like that and cost them 20 grand and tenant stuff. But we actually did an audit on all of our rentals, and we only 7% had a variance on an underperformance on the our projections, our initial financial projections on them, after like a 5-year term, which was pretty cool. And we've sold hundreds and hundreds of, to over 1,000 of these now, which is crazy, So, but yeah,
Hmm.
that's how you take care of them. And then at the end of the day, you have to constantly build relationships with your investors and add value. We do master classes all the time on our different investment strategies. We lead with due diligence, where every single time we have a deal, we put a full giant due diligence package together for them to review in detail. And then we try to make it easy and continue to develop the relationship with them even when we don't have a deal as well. So these are the things that are super important, and capital is a lifeblood to real estate investing. And so if you don't have that a systemized place for capital raising in your business, you're going to be limited at some point with how much you can actually accomplish.
Well, there's so many good things that we could still touch on, but thank you so much for sharing what you shared with us. You've just got so many different irons in the fire. You've been doing it a long time and still alive to tell about it, and that doesn't mean it's easy. However, very fulfilling. And so thank you so much, Matthew, for coming on and sharing. For people that want to learn more about what you're doing and the deals that you have and the opportunities that you have, where can they do that?
They can go to my website, which is MathewOwens.com. One T in Matthew because my parents couldn't spell. So that's what I tell them, because I've had to explain that my whole life. But we also have 200-point due diligence spreadsheets, because everything should start with the due diligence side on our site for free. We have master classes on different topics on capital raising and things like that, and finding deals and analyzing them. So it's all for free on our site if you guys want to go. But yeah, MathewOwens.com.
Awesome. Well, thank you so much for coming on and sharing. Excited to see where things continue to go for you in the future. So thank you so much.
Thank you.